At CBRE IM, through this coming cycle, we're really focused on income growth. So we've clearly shifted into a higher interest rate environment. We see the world staying in that environment, probably with more volatility there as well. So we're really focused on growing NOI across markets. That actually leads us to be quite sector agnostic. We're really focused on those pockets, be they markets or specific assets, where the strong demand is hitting a lack of supply. And we think that will be the key driver of returns. For offices, what we're beginning to see is that the stark bifurcation between the best assets and everything else is maybe just moderating a little. So in places like London, we do begin to see that demand for the very best space spilling over into the next tier of buildings and locations. So that's positive and certainly one for investors to watch. In retail, it's a very mixed bag. So you have markets like Spain and to a slightly lesser extent Italy, even the CE markets, where actually the consumer picture is strong, sales growth is good. There are plenty of schemes across the types, be it high street, retail park, shopping centre, where the prospects are good. When you move to Northern Europe, the picture isn't quite so positive and you need to be a bit more selective. There we probably see retail warehousing leading over the shopping centres. With all of the uncertainty, I think capital has become a bit more domestic and locally focused. So the European capital is really important. But we still see the flows from around the world. I think US capital is generally staying at home at the moment, but we see more flows from Asia Pacific, from places like Australia. We also see flows coming from Canada. They're typically looking for a little bit of extra return, so more focused on the core plus strategies than the real core.